All right, we're doing it. We are ready to go. Away. That is a little bit too hot at the moment. So, what am I doing here? What are we doing exactly? And right now, I just want to go through a couple of pairs here and take a look at some trading opportunities that we might be able to get involved with. Let's take a look now here. I'm going to switch over to here on the euro dollar. We are following this pair, and what I want to see out of this thing is that price action does come all the way back down into our structure zone here. Looking left. Look left, structure leaves clues always. So, what I'm looking for is a potential move towards the downside here. Right back down into our support zone. Then, if we do that, then I'm looking for a trade opportunity to get involved on the upside here. How do I do this? What is my case for entry? What am I looking at here? And as you can see, just to the left here, that was a counter trend trade that would have been really good profits if you were trading counter trend trades. That was about 50 pips worth of risk for a total of 170 pips, something like that. That would have been a really good trade, counting. If you're trading counter trend. So if I'm waiting for price action to come back down into this support level here, and I want to buy it up in anticipation that price action is going to move towards the upside, then I need to build a case for entry. And what I can see here with the naked eye already is a Fibonacci. If I use Fibonacci, because that is what we use here every day, every time I'm trading, that is what I use. So if we take our Fibonacci retracement and we go from this impulse leg, I'm looking at an impulse leg here. We have our swing low to our swing high. That is my impulse leg because that is a big move. Right. Fibonacci retracement from swing low to swing high, like this. So we can see that after we had our impulse leg right here, price action did come all the way down, hitting a minimum of a 382, and we came all the way down, hitting our 50%, right? So what I'm trying to identify here, or what we are identifying here, is a potential bat pattern. Again, if I'm waiting for price action to come all the way back down into our structure level here, then I want to buy it up in anticipation. I got it that time towards the upside. Where? Towards the upside. So price action comes all the way down into our 50%. So we need a minimum of 382, and then we hit the 50%. So that is condition 1 for our potential bat pattern. Now what we need to do is take a Fibonacci retracement tool and take it from our A to our B point, right? So we have our Fibonacci retracement tool and we take it from swing high down to our swing low. And what we're looking for here is price action to come all the way back up into a minimum of 382. And we do touch the 50% again. So 50% on our B point, and now we have our 50% on our C point. What I'm looking for here, so that was condition 1 and 2, and what I'm looking for here is condition 3. So price action moves all the way down into an 886. That would be our condition 3. Okay. And we take a Fibonacci retracement tool, and this time we go from our impulse leg once again, swing low all the way up into swing high. Okay. And here we want price action to move all the way back down into an 886. Once price action moves all the way back down into our 886, this is what would be considered our buy zone. Okay. And if we're using our if-then syntax, and all that really means is in which events occur. If price action does this, then I do that. So in relation to what we're looking at, if price action does move all the way down into our 886, then we're looking to buy it up. Okay. So that would be our condition 3. And the pattern would look, oops, let's make that a little bit stronger. The pattern would look something like this. We grab our triangle tool and we go from our swing low to our swing high, but here we're going to name the points. So we have our X to A to B, B to C, and C all the way down into D. And our D point completion right here is again condition 3. And this would be a valid bat pattern. So right now what we're looking at is our potential bullish bat pattern. This is on the euro dollar on the 4-hour time frame. And this is what you would call, this is what you would consider a swing-based time frame. And 1 hour would be intraday, 15-minute would be day trading. So what I want to do here is I'm bullish on the euro dollar on the 4-hour time frame. Okay, could be bearish on the daily, could be moving sideways on the daily, could, you know. So, but on a 4-hour, from what I can see right now, is we are in consolidation here, but we have, if we look left, and we take a look at our recent highs up here, right there, price action has closed above these recent highs. So we have a higher close. I cannot talk today. So if price action does move all the way down in here, then I have a buying opportunity to go all the way to retest these highs looking left. And we'll see if we can get some actual further move. Now, in doing this analysis and having that bias towards the upside here, does that mean that if price action moves all the way down into this box, that it guarantees that we move to the upside? No, it does not. We can absolutely just continue to move down. And some of you who are watching this video may consider that. Phil, you're flipping crazy. There's no way that it's going to bounce from this level. It's going to drop even more. And you're right. It definitely could potentially drop even more. But what I am guaranteed, and here's a point here. What I am guaranteed that every time on the euro dollar on the 4-hour time frame, if a bat pattern presents itself, see, I know my numbers, and in trading, knowing your numbers is business, and this is you treat trading as a business. And I always say, if you do that, trading will treat you as a business, not just any business, a profitable business. I know my numbers, so every time that this bat pattern presents itself, every single time I see it, every single time that I see it, I identify it, and then I'll wait for price action to come to me. Therefore, I'll wait for price action to come into my buy zone. I hit execute on the brokerage platform, and I get involved in the trade. It doesn't matter what the fundamentals are. Doesn't matter. What matters is that I tested this pair, that I knew that this pattern that I'm trading right now has a positive expectancy. above 0. And all the positive expectancy is you gain more than you lose over time. So over time, number 3, over time, trading this pattern on this pair on this time frame, on average, is going to produce me more pips than I lose. Yeah, that's a really, really powerful position to be at when it comes to your trading. And not have to stress and worry and go to the chat rooms and forums and things and take a look at Twitter and all that and see, oh, what is happening? What's going on with the news? And should I buy this or should I sell it? Should I stay out of the markets? I don't really know what's happening. And if you don't really know what's happening and you don't have a plan that's testable, verifiable, and repeatable, and you don't trade that every single day with discipline and consistency, then you absolutely have no idea what you're doing. Because if you did all of that, then you would be consistently profitable every single day. And it's okay. I've been in that position before in my life where I had absolutely no idea what I was doing. We all have to be in that position at one place or another in our lifetime, right? So that's what I'm guaranteed to do on this pair. Identify, predict, decide, and execute. We identified a potential bullish bat pattern on the euro dollar on the 4-hour time frame. We predict that price action may move towards the downside here, completing our D point completion and resting within our buy zone. And then we decide, using if-then syntax, if price action does move into this buy box, then I'm going to execute the trade. That's it. Identify, predict, decide, execute. Now, if price action does do that, where are my targets? Where are my stops? Where am I getting out if I'm wrong? And where are my targets? Where am I getting out if I'm right? So we take our Fibonacci retracement tool and we go from our full leg of the move all the way up from this point all the way down. Full leg of the move like this. Fibonacci retracement, we go from swing high all the way down to our swing low. Now we have to assume at our D point 886, that price action may bounce from this. So we have to start measuring from somewhere, okay? Now, the targets will be at our Fibonacci retracement at a 382 and a 618. That's where our targets are. But more importantly, because trading is all about preserving capital, protecting capital, that is wherein lies the profits in trading, by the way. We take a look at our stops. Now, we take a look left, and this is our X point right here, okay? And when we're trading patterns, and then, by the way, this is all in the training anyway. So if you wanted to learn about pattern trading, learn about the other pattern trading, learn about the other patterns, therefore develop strategies around pattern trading, there is a link in the description for you to join our 14-day free trial, and you'll have immediate access to that. I can't talk today, and I apologize for that. You'll have immediate access to our pattern trading video and everything else that we have, including the Star Live Trading Room, which I absolutely love doing at London Market Open. Now, yeah, so click link in the description, 14-day free trial, absolutely yours, immediate access. Stops are below the X point looking left. So here, my stops will be below our X point, okay? Now, where are our targets? Well, CD completion right here. Let's say price action does turn around at this point. We are looking at our 382 for target 1 and 618 for target 2. So if I do so make it a bit more pretty, Yes, I use the word pretty. I'm wearing a hairband. Come on. So if price action does move down into our buy zone, we can execute the trade because that would be a potential bat pattern. Well, that would be a market bat pattern if price action does move towards the downside there, hitting the 4 hour. Then our stops are below our X point looking left, and our targets are at 382 for target 1 and 618 for target 2. Now this is on the 4 hour time frame. Again, this is swing based trading. It does give people plenty of time to go to the chart and check this out for themselves. But please click on the link in the description. Join the Star Live trading room where I trade a live account every single day. It's important that I incorporate all of the training that we do have here at Star Prosper and actually show you in a live market environment that it can be done, and more importantly, that you can do it. Anybody can do it. And more importantly, you deserve to be able to do it, because I truly believe that you deserve the success in trading to live the life that you imagine for yourself. That's what I believe. So click the link, 14-day free trial. Don't like it, cancel. Zero risk, doesn't matter. What does matter is getting you the material and having you learning the language of the markets, because that, once you start understanding this and then you can see opportunities, potential opportunities, that's really exciting. And trading after that becomes really fun, super fun. And then of course, you do have access to the live room, which is also super fun. I hope you enjoyed this little video. I actually don't know how long it's been running for, but I am going to post this out because this is our potential trade again on the euro dollar for our time frame. Potential bat if price action does move all the way down into 09 to 80s, then I'll be executing this trade. Win or lose, doesn't matter. On average, we're making money, and that's what counts. Again, you'll learn how to do that. Link in the description. Be safe, enjoy life. I'll talk to you soon. All right, thanks guys.